DTM, what's going on, everyone? I hope you are well and doing great. We have such a fire session ahead of us. We're going to be talking about the current state of the market. We're going to be talking about the current structure of the current correction and whether or not we are looking at some type of capitulation event. We're going to be looking at gaps. We're going to be seeing when and if the gaps are going to be getting filled. We're going to be talking about what's going on with yields. We're going to be talking about what's going on with inflation and how that translates into possible potential deflation. And we're going to be talking about all the extraordinary things taking place inside CTM 2.0. Big shout out over here to Reza, Zuzu, Stu. Their work on CTM 2.0 in the community channel is absolutely legendary. And I'm looking forward to getting into this one with you. By the way, just a heads up, tomorrow, Good Friday, we'll have no session. I hope you all have just an extraordinary weekend, and we'll be seeing you all on Monday. Nevertheless, let's get what a pleasure, right? What a pleasure knowing, if you're trading the long side only, when you should be in the market and when you should be not. CTM knows those long side minded only, when they got on the sidelines for good and have been just waiting and chilling. I don't even want to get into that right now. And those that are trading on the buy side and sell side, right? Sell side holding on to a nice 5% plus open position right now. And it's all very beautiful. And it only gets better and better. Chio, Jose, what's going on? Good day to you all. Good morning. I'm glad to get going here as we're watching what? Well, Bitcoin's under pressure today, trading under $40,000. And you see the 10-year spiking up. To me, it looks like potentially, for now, the last gasps up. We're going to time that correctly. We'll talk about that a little bit further. I want to start off over here, and I want to start off looking at gaps. And I'm going to go ahead and, you know what, before we do that, I think it's important to define a gap. A lot of people don't really understand what it means for a gap to be filled. I think that it does matter. I personally like to know, right, what is, and always looking to learn. A gap, right? A gap on a chart is considered to be filled when the price action moves back through the opening gap area where the transactions were missing. Price must retrace. This is the important part. Heads up. Learn something new today. Price must retrace all the way to the closing price of the previous day before the gap. Once price has returned to where it was before the gap day, it is technically filled. If price moves, this is where people get confused. If price moves inside the gap area, the wicks inside the gap area, but does not move all the way through it, that's called a partial gap fill. And a lot of people get confused thinking partial gap fills are gap fills. And it's by the way, the deal is you learn something new today. You go ahead and smash the like button. If you're new here, welcome. And if you're not, welcome back. We're going to do what we do over here and make sure we get into it. I have on the chart all the open gaps. All right, let's take a look at them. By the way, before we broke out into the bull market, here on CTM on the public side, around this time over here, I was letting everyone know there are going to be gaps. And most likely, those gaps will not get filled. If you look at something like Amazon and you go back and you look at a long-term chart of Amazon, you will find many gaps that have not been filled. Before this all happened, we were talking about it as it occurred in real time. The ones on the upside over here, though, probably they are going to get filled. Let's take a look. Now as everyone understands what a gap is and what a gap fill is, let's take a look at the gap. We'll start the gap above us. You can see, remember over here, this was that Friday, 53,140 technical breakdown. This was posted on the public channel here on CTM that morning before the breakdown. The day before and that morning, we told everyone, if you get that breakdown, we explained why it was such a big technical breakdown. Again, that video is available on the public side if you haven't seen it yet. That is it's time to take profits from all leverage trades. Something's wrong at that point, and we were able to protect ourselves. It left a big gap over here, right? And then you see that price the next day. Here's on Monday. You're looking at a chart of the CME futures which does not trade over the weekend, you saw that price came up. A lot of people think that's filled because we have this little bit of overlap. But that's not the definition of a gap fill. A gap fill's got to come all the way back over here to where the close was on that Friday. And that gap has not yet been filled. I imagine it's going to get filled. The question is, which gap gets filled first? This one, or does the one below it get filled? Let's take a look at that one over here. A lot of people are unaware that this is even a gap. Most people, not really understanding what gaps are, they think that this is the gap down over here that needs to be filled. And if there's some type of capitulation event, we're going to be looking at that in a little bit on this session today, that potentially could get filled, right? It's an open gap. You could see the close over here. You could see the open, and there's a lot of space, a lot of transactions that have yet to be filled. But above it also, you have another opening gap. This one over here occurred on the Friday. Here's the Monday. And yeah, we came all the way down and we touched the top of the wick over here, but the gap is yet to be filled. And then we have below, do you think this gap's going to get filled? There are people over here. By the way, if Bitcoin were to have some type of capitulation event, a lot of people are going to be talking about that gap down over here below 10,000 getting filled. Is it possible? Guys, girls, ladies, gentlemen, it's the market. Literally anything is possible. Do not take unnecessary risks. You all saw oil trade negative, crude oil trade negative, right? So anyway, look, is it possible this gap gets filled? It is totally possible. Is it unlikely? In my humble opinion, it's highly unlikely that these gaps ever get filled. And you have 3 of them down over here. They're called runaway gaps. Runaway gaps occur in markets that are undergoing adoption, that grow exponentially, and you have gaps to the upside that never get filled. The point of all of this is, first of all, to share a little bit of education, as we like to learn something new every day. And it is also just to reinforce, listen, it's a very poor strategy. A gap trading strategy here on an asset like Bitcoin that's experiencing adoption, S-curve adoption, it's a very poor strategy to employ. Now, you all know CTM 2.0, we have extraordinary strategies to employ, right? But this is not one of them. Which gap gets filled first? The one to the upside or downside? I have no idea, but you have to find it a little bit ironic that people are only looking for the gaps on the downside to get filled. Here you have $53,000 and change waiting like a magnet to get filled. And it's just my opinion that this is the one that gets filled next. This is the one that gets filled next. We'll see how that works out. I thought most of the gaps that people are concerned with are CME gaps. You're looking at CME right over here. You can see over here, you're looking at the CME futures. All right, SS, we're on the same page. Let's keep going, right? Important to get that education in over here, right? So let's take a look at this chart over here. Again, now I'm lining up over here. I'm scaled to the halving, but I'm lined up to if the April was actually the top on Bitcoin. And a lot of people right now are looking at the current developing structure, the correction taking place, and Bitcoin is under a correction, right? That gap is the danger zone on the upside. So I don't have that chart pulled up right now. Let me go ahead and take a look at that. Chio. What Chio is referring to is, no, that's not it, Chio. Give me one more chance to get that up over here. Thank you for your patience. I want to take a look at the bearish case for Bitcoin over here. And you know what? I don't have it. So let's try this one. Maybe this is right. And if not, we'll just keep going along and then I'll just go ahead and answer your question. Yeah, I don't have it right here, right now, Chio. And what Chio's talking about is above that area, right? It's between somewhere above $53,000, somewhere between $55,000 and $58,000 is an area that we call the danger zone. And if price were to retrace that, like right now, what's going on Bitcoin? If you look at Bitcoin, I see when I look at Bitcoin, that price has been consolidating sideways for the past year. Now, some people consider that price making higher highs and making higher lows is bearish. Oh, I mean, okay. I consider price making higher highs and higher lows while consolidating in a massive uptrend to be bullish. Now, we could get a technical breakdown, right? And over here, you could see this line, this channel line over there. And yeah, a break below that line, that would, in my belief, be looking to take out that January 2020 low. And if that were to occur, yeah, at that point, that's a technical breakdown. Probably we're looking at something lower. I have no idea what that would be. It depends on what is happening. As I look at what's happening right now, I see that yields are a lot higher than they were in January. Here's the low in January. Yields are a lot higher now, and Bitcoin is higher. That's a good thing. I see that, well, we had a lot of uncertainty coming into the first rate hike, and, the rate hike, happened, and Bitcoin is trading higher than it was on March 16th when the rate hike, happened, or right about it, right? I take that back. March 16th, I'm looking at a 3-day, is right around 42,000. So we're trading lower than that. Equities are trading higher. Oh, but Jordan, Bitcoin is just a high beta tech play. Yeah, it's a lot more than that. You're going to see about that in this session today. We got a lot to talk about. Drew, what's going on? Good to see you. Gio, a little bit above, right? A little bit above 53,000. That's the danger zone. But we'll talk about that when we get to that. Like, if price is able to rally, relief rally somewhere into that area over here, we will be watching to see what happens next. It's 2022 because of the Fed policy, which is tightening. We're very cautious and at times cautiously optimistic. This breakout of the most important trend line in crypto, cloned, that has us more bullish, right? It was over here. We talked about it in yesterday's session when we had that first original breakout of right over here on that, I don't know if it was CPI or non-farm payroll on a Friday. And we talked about that long. That had us all, cautiously optimistic. And, when I say cautiously optimistic, that means everyone has their Bitcoin position. Right now is a time to be building up reserves for the foreseeable future until the Fed pivots. A lot of people are trying to time when the Fed pivots. I'm not. I'm looking for the Fed to get some more hikes in, and I'm looking for the Fed to begin quantitative tightening. It's what they said they're going to do. Now, it doesn't mean they won't be forced to pivot, but that does not look like it's today. It does not look like it's today, and I think that's something that's extraordinarily difficult to time. Rather than trying to time when the Fed pivots, when the time comes that the Fed pivots, then we could take the reserves that have been built up for the foreseeable future and put them back and deploy them back into Bitcoin, and then even begin taking on some potential leverage if that's something that you want to do and you understand how to manage your risk. By the way, a lot of people, when Bitcoin, you remember on the channel over here, Bitcoin between $10,000 and $13,000, I'm borrowing against my Bitcoin and I'm buying more Bitcoin. Oh, that's absolutely reckless. Okay, here I am today. How are you? Right? So, just because some, experts only, but hey, work on becoming an expert. Hang around with those that know, and it rubs off. And, we talked about earlier, like the stuff that happens inside the community. Mark, giving a big shout out to Reza, Zuzu, Stu, and not to leave anyone unmentioned, right? Because the hive mind is like never before, right? Instead of people looking to build followings and go out and start like their own newsletter, now the hive mind is working together, and it's absolutely extraordinary. So sometimes you got to cut through. Anyway, here we go. So what are we looking at next? Where are we going with this? The danger zone, if that happens, right? If we get up there, we will be watching very carefully to see if we get a technical breakdown, and we will make everyone aware of it if that does occur. All technical breakouts and breakdowns, we are making sure that everyone is aware of in case they want to go ahead and position accordingly. All right, let's keep going. I'm not sure what we were doing over here. So I'm going to thank you, Cassidy. Anyone who's watching this video at any point in time that you enjoy being here, please go ahead and crush the like button. It's highly appreciated. Are we headed for some type of event like this? This is where price is trading at today. Are we headed for some type of potential capitulation event? Lots of people are looking for it. Lots of people are looking for the Fed to pivot around this time in the summer. Could that coincide with potential capitulation on Bitcoin? Of course it can. Who knows? I don't know. Let's talk about it a little further. Mr. Wunderbar, right? This is a great insight to the structure that's developing right now in Bitcoin. He's like, let's make it all very simple. If you search inside TradingView, if you're moving hour cross indicator and set the settings to short 50 and long 200, right? So we're looking at a potential death cross, but on the 3-day time frame. On the 3-day time frame, the first picture up here, it shows the structure during the 2014 bear market, and then we have a triangle. It's very clear, and that it's until we get to where we have the moving hour crossover, and then right after that we get a capitulation. The same thing happened in 2018, and you could see that potentially occurring right now. Now, they haven't crossed over yet, but, they may in a month or so, right? And let's talk about that a little bit. Let's look at it like this, though. This is lined up more from the halving instead of lining them up as if April was the high, the all-time high on Bitcoin, just lining them up and scaling them from the halving. And, in the way that it's viewed, when I say it's the way it's viewed, the way that Mr. Wunderbar is looking at it, it's showing here that, well, this is the top over here. Price did make a high of $69,000, taking out the high over here of $63,000. That is the all-time high on Bitcoin. And it looks like, from that triangle nature that we could potentially be heading up for that traditional bear market, that triangle that ends with capitulation, that triangle that ends with capitulation. And a lot of people are looking on that, and a lot of people are focused on that. And just as we said earlier, if that were to occur, then yeah, this gap down over here most likely is getting filled. It's on the table. There's no question about it. Would I go out and say that, with certainty, I think that's going to happen? Absolutely not. Absolutely not. I have no idea what's going to happen. I just know how to stay on the right side. You all know that because you've been so focused in on it. So let's take a look. And I did say, by the way, over here prior to December 2021, November 2021, I always said if price did not peak out over here at the end of the year, beginning of next year, at that point, I would no longer be leaning on something that served me so extraordinarily well, and that was the 4-year cycle and the dynamics. Now, to me, and as you all know, because I outline it over and over again, we've been doing it together in real time now for many months, how we are noticing the current structure change. Now, to me, that's not some type of random walk up to a million. There's nothing random about what's happening. Actually, it's happened many times before throughout all different types of technologies that have been adopted, and it's an S-curve. There's nothing random about it, but nevertheless, let's keep going. The CTM Dream Team, Bitcoin could capitulate for a higher price also, say a run up to $55,000, $60,000 in August, September, and capitulate down to 32, 39 is cheap now. Yeah, Luke, there's no question about that. I hope to build off that in a little bit right here ahead. Let's keep going. And where are we at right now? Oh, so I was just talking about, like the 4-year cycle. When I talk about the 4-year cycle and what it's done and what it's meant, right? We have over here, the last time price did capitulate. Is it easier if I go ahead and I just get like the white line? Yeah. So the last time price capitulated, you could go look on Twitter over here on December 18th. I was like, there's blood in the streets. This is the time to buy, because I had that 4-year cycle awareness. And then 3 weeks later, as that Adam and Eve bottom was put in, I pointed it out. And I then said, within the next 3 months, you're going to see Bitcoin trading above $8,400. Now, that was only done with 4-year cycle awareness. It went a lot higher, obviously, right? And then, what caused me to be able to kind of sound the alarm to get as many people positioned into Bitcoin as possible prior to the halving and making these predictions was because of the 4-year cycle. The 4-year cycle has served so well, but the market's getting a lot bigger now. There's a lot more participants. and the incentives of the participants are also changing, right? And therefore, we're seeing the current structure changing. I'm not going to go back and say, well, the last two cycles, they formed a bear market structure that looks similar to each other and ended in a capitulation. Well, that's the same thing we were doing on the upside. That didn't work out. Is it possible because we didn't have that euphoric blow off top on the upside that we don't have that capitulation on the downside? That's the question that needs to be asked. Blockwise putting out this really nice tweet this morning, right? And he's talking about the current structure, similar to what we were just talking about, or Mr. Wonderbar was talking about, and just able to show it in a very nice way. Hold on one second. Let's see if we could go over here to the tweet first. And he's showing, look, over here in 2013, top, aggressive downturn, consolidation, and then the capitulation bottom. 2017, same thing occurs. You have the parabolic top, the aggressive downturn, the consolidation, and then a bottom, right? And I'm just pointing out, look, lots of participants are looking for something similar like this to take place, right? Whoa. What's going on over here? Let's get that up. Let's press refresh. Let's get that up on the big screen. It's not coming. That's okay. We'll come down over here. We'll try it like that. There's always a workaround. All right, it's not happening. We'll go to the workaround like this, and here it is. A lot of people looking for something like this to occur. A lot of people are, oh, Zach, have a beautiful weekend. Have a beautiful, beautiful weekend. I'll see you on Monday, Zach. Look, this will be available on the replay. There's a lot of exciting stuff towards the back end of the session that you don't want to miss, Zach. Make sure you get into it as we move towards that CTM Insider CTM 2.0. So lots of people are looking for this, but you know what? This might not happen. And why I say it might not happen, let me come back this way. Error. Lots of participants are looking for something like this to take place. The main difference I see between the three cycles is the parabolic top in 2 or 3 of them. The last one did not have a parabolic top. The destruction caused by that parabolic top required time and capitulation to repair. I don't know. Is that same repair needed with over 64% of the supply holding? It's a question that I don't think anyone has the answer to. But when I look at this correction, right, it looks, again, for the time being, it looks very bullish to me. Price making higher highs, price making higher lows. That could change. We could break down. And if we get the breakdown, believe you me, we will call it out. Just as we did up here. By the way, we were the ones. I was the one. It was on video. The correction of wave 2, first of all, coming off of over here in September, the correction of wave 1, as price was at $41,000 and everyone was scared. We called that the time and the date, and I won't do that again. I've learned that, listen, there's no need to go that far and call time and date. But we caught it. We caught the top of what that was over there, touching that 69,000. There was a huge big shout out from Ben over at the Cryptoverse, talking about how it was done, retweeting the tweet. And I called the correction over here. You got some people now saying that, like, oh, they've been selling Bitcoin ever since we exited over here. Did you sell your spot? Of course you didn't. Don't act like something's different than it is. Price broke down. We called the technical breakdown over here at $53,000. So everyone that wanted to be protected, I didn't sell my spot. I just took profits. And the same thing going forward. If we get a big technical breakdown, we will call it. But listen, you got to call the breakouts too. And we called the breakout that occurred on that Friday over here. And we looked at that in yesterday's session. And then since then, it's continued to progress. And there's a lot of fear in the markets. I understand people are a little bit shook up. Dang, just looked at the gap on Twitter on the daily. Interesting with all that. Yeah, so Trish, I guess, talking about Elon flexing on Twitter, I think, what most likely happens is the board is going to go ahead and decline that offer. Elon made an offer. He said it's his best offer. He's cutting to the chase. He's not looking to negotiate. And we will see whether or not that offer is accepted or not. I have a feeling the board is going to not accept it. That will probably put pressure on the stock, right? we have what else? And then the shareholders are probably going to get really mad at the board for not accepting that really kind and good offer. Fun to watch. All that type of stuff is fun to watch, and you can learn a lot in real time by following it and speculating it mentally. By the way, this is your daily reminder. This is your daily reminder that you are an earlier adopter. If you are watching this right now, if you hold a Bitcoin position, you are an early adopter, and what looks like this party is just about to get started. Some takeaways from the Bitcoin 2022 Miami conference. Bitcoin is well past the here to stay phase. We haven't yet made the leap, right? There's a leap over here, a liftoff, where you go from, the hype phase, the facing reality stage, and then into liftoff. This is like the sweet zone over here. A lot of people think they are late. A lot of the people that think they're late to Bitcoin are going to be buying up here. And we talked about yesterday, the next type of euphoric phase on Bitcoin, that actually might not come from speculation. That might come from necessity, that people need to protect their purchasing power. Jordan, that sounds inflationary. What are you talking about? It might be the time to buy bonds and wear diamonds. We'll talk about that in a second. First, let me finish this over here. This is Michael Saylor at the conference, and he's saying, listen, there's not going to be a crypto ban in the developed world. This was probably one of the biggest obstacles to institutional investors getting involved in Bitcoin. Now, whether you take the stance that I don't want institutional investors into Bitcoin or whatever have you, look, that's not Bitcoin. Bitcoin is open. If the Kwang guy wants to go ahead and buy billions of dollars worth of Bitcoin to back a stable coin, he could do whatever he wants. It's a permissionless network. Stop trying to tell people what they can and can't do with it. That's absolutely ridiculous, right? And if the institutions feel like entering into Bitcoin, well, then they can enter into Bitcoin, right? Somebody, and by the way, those that are able to go ahead and continue to promote, let's say, safe and private ways to use Bitcoin to secure their own coin, to hold their own keys. That type of education is absolutely foundational for what being a Bitcoin is all about. And it's just on us to continue to educate each other. But mom and dad and Uncle Gary and Aunt Alice and cousin Ricardo are not going to be buying Bitcoin unless the world adopts Bitcoin. Somebody's been whispering, Janet Yellen now, right? She's talking about embracing Bitcoin, making the flip. And Saylor says that Biden's executive order, right? In this context, when was the last time the sitting president of the United States issued an executive order for all federal agencies to get up and speed up on an asset class? That's not pre-staging a crypto ban, but a de facto green light for the entire space. It makes a lot of sense to me, and that's why we look at it like this. We are getting close. I have no idea where the liftoff stage is. The reason it says liftoff over here, by the way, is because I looked at past assets. It was looking at a chart of Amazon and this current fractal that you see right here in Facing Reality that led me down this whole rabbit hole to understanding what this was happening over here with the adoption of technology on an S-curve. And it's not just Amazon. You could look at anything. You could look at Apple. You could look at Facebook. You could look at Nvidia. You could look at Microsoft. You could look at so many different technologies that have gone through that hype phase and then into that Facing Reality phase. And then the ones that are able to make it into, past liftoff. Do you think Bitcoin is here to stay? Or do you think that a fork of Bitcoin is going to be better than Bitcoin? Do you think some altcoin is better? We went through all of that during the Facing Reality stage. Bitcoin has proven itself, right? So we're getting close to when that liftoff is made. In my opinion, the next all-time high on Bitcoin is that jump into liftoff. We will see. How it all unfolds. Look, we got to keep putting the work in each and every day. It's all very fluid, right? And we all know, as CTM has said since the very beginning, that the greatest risk to any of this is the Federal Reserve and its monetary policy. They are currently tightening. We are currently cautiously optimistic. Let's take a look at this really quick and just add this comment over here by Prom Pie is a really good one when we're talking about like comparing this to something like mobile phone adoption or the internet adoption. I have a different take. Mobile phones and internet users were both met with very elastic supply. The equation we are missing is NPV. I don't know what that is. Who in here could help me? Of future scarcity. Bitcoin is more bond than tech. Well, both, just with a scarcity curve instead of a yield curve. Find the value of that, and you're going to win a Nobel Peace Prize. And that's the thing. That's when we talk about all models and all models breaking to the upside. I don't know what the trajectory. I have this yellow line over here. Whether or not that winds up being correct, I don't know. Whether this is like skewed a little bit this way, or winds up going like this, I don't know. It depends on what happens. But I think we have it pretty close. Not net present value. Thank you, Jeff. Core Reality. Appreciate that, Leslie. All of you, all over it. I haven't heard any updates on the Volcano bond. I think that when you look at it and you're talking about a $500 million purchase, the Quan guy is doing that regularly in between his house cleaning, right? So you have just more and more players and more big players getting involved. And what's amazing, though, is that we'll bring other nation states looking about what's happening in El Salvador, looking how the people are able to get away from that tyranny of the current, let's call it IMF clause that are around it, and able to actually, experience things like less crime, better healthcare, better education. And then you will find out, like we talk about at first slowly, or at first gradually, then suddenly. And the Volcano bond is another domino in all of this unfolding. And it's going to lead to, first of all, further bonds, I believe, taken out by El Salvador, which means further Bitcoin purchases. And it's also going to lead to other nation states, in my opinion, following that playbook to get out of what they're currently in. And I just want everyone to focus. A lot of people are focused on, are we going to have a technical breakdown, by the way, right? And come down and perhaps capitulate. And since I don't have enough Bitcoin, I think that's the best way I don't think that's the best way to acquire more Bitcoin. I think that opens up the door if you're wrong and price trades up higher, and even worse, goes towards a new all-time high. If price never breaks down outside of this channel, right? If you never get a chance, you're short Bitcoin, worse, or you're just on the sidelines. By the way, if you're on the sidelines, everyone on CTM knows that's long side only. When they got on the sidelines over here, up at, is it $45,000? I'll check with all of you exactly in a moment. But look, if Bitcoin never has that capitulation and all of a sudden starts rising, what's your pain point when you get back in? And you're missing out. You're missing out on a once in a lifetime opportunity. And again, people will talk about it later. So let's keep going. I'm looking at this over here this morning. This is the 10-year. It's getting really high. And then we could go back to when it was really low, right? I could come back to the public videos on this channel on this time over here in April 2020, when you had a lot of the macro experts telling you that this QE was deflationary, right? They were telling you that this is just, it's deflationary. And we were like, no, in fact, it's uber asset inflationary. As a matter of fact, you cannot sell assets. And we took the view of selling bonds a lot earlier than a lot of people here today over the last, let's call it, the last couple of weeks have been like, oh, you got getting on that side of the trade. But we were on it down here, right? I didn't actually sell any bonds. We talked about the day that Stanley Druckenmiller did it, right around over here. I obviously positioned into things like Bitcoin at that particular point, talked about not selling any stocks and things like that, all assets. But I deployed through Bitcoin and heavily leveraged, indeed. Now over here, a lot of people, as the herd normally does, down over here, oh, this is deflationary. Okay, and this is where the good Raoul Pal, so amazing at articulating things once he understands them. But this is when he started his trade. This is when he started his buy bonds and wear diamonds trade. And if you watch any interviews, there's one on Anthony Papalano, and it's coming in here into early 2021. He was still adding to that trade and taking that trade. I mean, I don't know where he exited. I hope he did, right? But over here, a lot of people now are flipping and they're like, oh yeah. And if you look at something like Real Vision, you'll see all the headlines. Inflation, inflation, inflation. Wait, you guys were talking about deflation down here. We were talking about inflation, and we were asking how come you have the guy with the paper hat on your channel and not us, right? So over here now, is it time to be rethinking that? Are we going higher? Jordan, do you think your account is suspended and not able to permit this action? Come on, Elon, I hope you're able to buy Twitter. All right. So, I mean, live here, you have it over here. Account suspended for whatever reason. And probably because we talked about things like, is it time to buy bonds and wear diamonds? The time is approaching. Timing for everything. I'm not going to be able to switch out over here. That's why we were getting that crazy, like not loading. Nevertheless, here we are. So where was it going with that before we just found out that Twitter was suspended, right? I forget. Oh, we were talking about Raoul maybe, or the crowd. Anyway, I don't know, but I'm wondering to myself, is this the time? Are we setting up to the time to buy bonds and wear diamonds? Is that approaching? Timing is everything. Now, most people you'll see here in the comments, they are like, inflation's here, right? And I'm like, yeah, I know. I told you that down here. You caught on to that over here, right? So I'm looking at this and I'm like, well, timing's everything. Here's that sell impulse. It does look to me like price is potentially going into a parabolic move over here. These things could be very volatile until it triggers. Here's the trigger, right? Obviously, you're not taking that short, but potentially are we looking at, the last grasps? I'm not the only one. Over here, we looked at Jurian yesterday. Hey, look, another guy who actually espouses some similar beliefs with the adoption of Bitcoin. He's looking at the bond market and he's like, you know what? This is the head of Fidelity, the giant, what is it, $11 trillion Fidelity, the macro side. And he's like, look, I thought around, 2.5 would make a good entry, right? But maybe now that's around 3. But again, he's looking at his boiler bands that he has over here. These may or may not be boiler bands, but same type of premise. And he's looking like, you know what? This is setting up. I'm watching. Timing's everything. That's why we have our TA skills over here. I'm going to continue watching over that. I like how now the rest of the crowd, you could tell from those comments over there, are really, really, really bearish on bonds. You have Preston over here. We were talking about it at the end of yesterday's session, and I was saying to you, is it possible we're looking at a peak, an interim peak here of inflation, right? Yes, I do believe on the next round of QE that comes that things are going to go much higher, potentially even setting up the next time there's a massive expansion of the balance sheet, a potential hyperinflationary event here in the United States. It's all possible. Preston looking at it and wondering, are we looking at, peak inflation over here, right? And I'm like, it's too early to tell everyone. People are not ready to hear or understand that. Oh, I wish I was not banned from the Twitter, because we have Mark Moss talking about, how food prices right now are rising. We're talking about how we expect that to continue because of especially what's occurring over in the Ukraine and Russia, some bread baskets of Europe, fertilizer prices. But it's like we talked about demand destruction yesterday. You're seeing used cars started trading so high that all of a sudden there were no buyers for them. And then all of a sudden now the prices are capitulating. I'm looking to potentially, with the 30-year rising, has risen so high that the housing market, again, putting in some type of intermediary type top. And you might see things like shelter coming off in price. It's kind of like whack-a-mole, right? At first we saw lumber shoot the moon, and then lumber came down and other things went up. Right now, are we going to have food coming up? It certainly appears like it, but other things seem to be coming off as well. There's nothing easy about it. On that tip over here, oh, snowstorm. Woo! Love me some snow. That's all right, Jed. It doesn't really matter. It really does not even matter. But we'll find out what happens, right? There's a lot of people. Obviously there's no reason I could have gotten suspended. That would be like, let's call it justified. But there's a lot of salty people out there. Who knows? Peak inflation. It does not matter, right? Goldman, Goldman never trust an investment bank, number one, right? By the way, if you're still here, go ahead and make sure you smash that like button. Goldman says that core PI inflation is likely to peak sometime in March, or just peaked in March. Wasn't April higher? I don't know. How much should we focus on the direction of momentum? Look, U.S. inflation. I know. A lot of people don't like, though, for whatever reason. U.S. consumers are getting crushed by the sheer size of inflation. This is real. We've talked about how this is hurting a lot of people. We talked about rising food prices, rising energy prices, a lot of people on really tight budgets. Even if they manage to secure a wage increase of 6%, as the Atlanta Fage tracker suggests, their spending power is shattered to pieces. What consequently matters most is where inflation ends up, not where it peaks. So this is something we've kind of talked about as I'm talking here about, is this the turn? People might be wondering, Jordan, do you not think they're going to be raising rates anymore? No, I still think they're going to get some more rate hikes in. And I also think that they're going to be starting quantitative tightening before a Fed pivot comes. Now, if you look back at what happened in 2000, right, rates kind of started going sideways as they continued raising them. If you looked at what happened and then roll over, and if you look at what happened in 2008, the same thing happened. As they continued to raise rates, yields started to go sideways and then roll over. And if you looked at what happened in 2018 to 2019, they're still raising rates, but yields, they started going sideways before rolling over. I'm just pointing out we might get potentially to a place over here. We get that sell impulse. We might be looking at rates starting to move sideways before rolling over. Or you could even have, as you have a sharp move up, you could have sharp move down. That's how these things tend to work very often. All right, let's keep going over here. Talking about, being on the right side at the right time, right? Some people holding that short trade right now. Others just have gotten neutral over here ever since that last exit over here at 45,800 on the buy side only. And it's been a pleasure knowing when to be in the market and when not to be in the market. These are absolutely the holy grail in itself. So let's continue over. Oh, plateauing, right? So I've talked about with you all that it's not as if like these prices overall are going to go down. Like we see these like big moves up and then kind of things plateau out before the next big move up. I think that's what they're trying to say over here when they say it matters where inflation ends up, because it's not coming back down overall. It's just not going to be growing at the rate it was. Anyway, I think there was something else I wanted to share there with you, but I'm going to keep going. We're going to start our CTM only session right now. Everyone else, thank you for being here today. We will not have a session until Monday. On Monday, we'll be back at it. We'll also have regular uploads at that point. Until then, I wish you all, those that are celebrating an incredible, a beautiful, 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 first of all, Holy Week as we begin to enter into this period of just, drawing closer, and just a really, 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 really joyous Easter.